Hello traders, welcome to Zion Traders. So today we'll be analyzing JPY, right? Using JPY basket. JPY basket is actually the benchmark asset, right, for measuring yen, right? So before we take a look at the technicals, let's go look at the fundamentals, right? So there's actually a good news, right? So the first news is that their interest rate still remains at 0.5%. What's the implication of this their interest rate? This their interest rate has been very low, on the low side for a very long time compared to other country like US. Their interest rate is about 4.50% currently. And if you look at it compared to 0.5%, if you are a trader, what will you do? You want to borrow from a country like Japan and then invest in a country like US. Looking at the fact that if you have to pay low interest, 0.5% interest on your on Japan where you are borrowing money from, and then the return that you are going to be getting from the money you borrowed on US is going to be much better than that of Japan. So that's what you do, and that is called carry trade. Now, like I told you guys, there's a good news. Let's go take a look at their policy statement right here. So I don't want us to read through, but then I'll summarize it for you guys. So BOJ, which is Bank of Japan, right? So they have decided to start reducing JGP. JGP it actually means Japan's government bond, right? That's actually what it means, right? So they have actually decided to start reducing JGP, which is buying the purchase, which is QE. They have actually decided to start reducing it gradually, right? So, however, this is going to be a gradual process. Now, what does this implies? First of all, I want you guys to understand that the Bank of Japan they implemented a policy which is a monetary policy which is a QE since 2001, right? And that's when they implemented that policy. Now, someone that is new may be asking, what is QE? QE is actually called quantitative easing, right? And what does quantitative easing do? It means that the government, the central bank, which is in this case Bank of Japan, they are actually buying government bonds. And when they buy government bonds, right, they supply money into the system. They pay through their system, right? It's like they are electronically creating money. They are not creating it in hard currencies, but then they are electronically creating money. So that means more supply for the currency, right? So for the country, more yen supply for Japan. That's what Kiwi means in simple terms. Like I don't want to go deeper. So what they have announced now is that they want to start reducing the QE. Now remember that QE has been ongoing for since 2001. It has been a very long time. So every quarter, I think so, they've been buying government bonds, and that means they have been supplying more yen into the economy, right? So that weakens the yen, right? But then right now they want to start easing that. They want to start reducing the amount, right, of government bonds they buy every quarterly, right? They buy quarterly. So this is the reduction plan, right? So they are going to cut it by 400 billion yen per quarter until Q1 2026. Now, and then from then they are going to start cutting it by 200 billion yen per quarter from Q2 2026 to Q1 2027. Now, what's the implication of this? Since the QE is going to start reducing gradually, it actually means in the long run, now this is a gradual process now, right? Now, in the long run, this is going to positively affect the yen, right? Right? So that is what it means, guys. Now let's go to their CPI, their national core CPI. Now, when we scroll down, we can see that CPI has been above uh BOJ set target, which is about 2%, right? For a very long time now. For a very long time, it has been above it. Why did they even introduce QE in the first place, right? Is for the economy, to strengthen the economy. But right now, we can see that the economy is gradually now being strengthened, right? Seeing that there are a lot of demands and all of that. But then it's actually weakening the economy. There are a lot of economic activities going on currently in Japan, right? And that's why we get to see that the inflation is hiking. But then, if we look at it, right, if we look at it, that's actually the QE. the quantitative easing, right, that they introduce is what is that indirectly affecting this CPI. All right, that is actually the reason why we see CPI going on. Now, let me explain why I'm telling you that Q is what is directly indirectly affecting the CPI. Now, when an importer, let's say I'm in Japan, I'm a businessman in Japan, and I want to import goods from, let's say, US, and I have yen. Before I'll be able to import goods from US, I'll have to convert my yen to my Japan to a USD, right? So now, yen, because of the much more money supply, and that actually decreased the weaken the yen, right? So I will need more yen to purchase and to convert to USD. This case, I will need more yen to convert to USD. That's actually called import inflation, right? So imported inflation. The price now, when I bring it into the country, the price at which I'm going to sell to my customers is going to be high, right? Now, when it's high, what does that mean? When customers now start buying my goods, the goods are imported at a very high price because of the imported inflation, is going to do what? It's going to make my selling price very, very expensive. And when customers are buying at a very expensive price, what is CPI? Now let's go to what CPI is. It's a change in the price of goods and services purchased by customers excluding fresh food. Now, when customers are now beginning to buy the goods and services at a very expensive price, that is what leads to inflation. I hope you guys can connect the dots right now. So that's the reason why you see CPI has been up for a very long time, right? So QE is indirectly affecting the CPI. Now, so what we should watch out for currently is that since CPI is now, like, the inflation is now very high, our expectation in the long run is that and also a very good point here is that since they are gradually reducing the QE, we may most likely begin to see BOJ, which is Japan Central Bank, start hiking interest rate. And once they start hiking interest rate, what does that mean? So remember, if we connect this to what I explained before, which is carry trade, we will note that now, if customers were borrowing more money from Japan before, and then investing it in dollar, what will customers start doing? They will stop reducing it, right? They will stop. Most customers will stop. Most investors, sorry, they will stop that carry trade. And when they stop that carry trade, it will make the yen to strengthen, right? Now, another point here is, if, for instance, let's say countries like US, they start also cutting interest rate, it will also we strengthen yen, right? So because this is yen is a safe haven asset. When there is a global risk in a global risk, right? Investors will want to buy safe haven asset like yen. So this will also strengthen the yen, right? Let's connect the dots, right? So let's just summarize everything. This their reduction of JGB is actually gradual. Remember, they said is they are going to gradually do it to reduce it by 400 billion yen quarterly till 2026, right? And then from second quarter of 2026 to 2027. So what this means is, for short-term traders, this may not really affect you actually, but it's only for, let's say, position traders, that this they will now begin to shift. Like, there will be a shift, because they will know that in the long run we could see we are expecting Bank of Japan, right, to start hiking interest rate since this JGB is now reducing. So they are now, thank God that the economy is now, like, there's now a lot of economic activities. Everything is now beginning to come up, and then we could start seeing interest rate getting hiked. So this will mean in the long run yen will be strengthened. That in the long run, not in the short run. That is just the truth. In the long run, yen will be strengthened. Let's go to the technicals and see what we have here. Personally, I've been shorting yen in the sense that I've been buying other currencies like GBP, JPY, USD, JPY, and let's see. And hopefully, it continues to go down. So looking at the technicals, guys, we can see right here the current price action. We can see there is a break of structure bullish, right? And where is price currently? Price has successfully traded back into this order block, the origin, which is very, very good. From here, that's why we saw price started buying up from here. So right now, price reacted off from when price was buying, it reacted off from here. And however, we could see also see that there's a change of character. Remember what I always say, whenever you see a change of character, it means a potential trend reversal. Although a break of structure is what confirms a trend has reversed. So what we should watch out for is this, guys. So since price reacted of this other block, which it should do, right, and it did, and price came to this other block, right, and then reacted off it and started selling. Right now we are here, and it's like price is also reacting off this level again. So this level is a very strong level currently, since we have one, two, three. So it's a very strong level. Now this is the third touch of this level. So retail traders will want to even start buying right from here. But then this is what we should watch out for, right? So is either price starts selling up from here. So what I'm watching out for is either price breaks out from this point, right? Is that price breaks out, or we start seeing level of buys from here, like a long buy from this point. So we should watch out for these 2 points. So it means where price is currently is a very important level. Is actually going to make the decision for the long term, whether we are going to go bullish for a very long time or we are going to go bearish. But for me personally, I'm really expecting that yen will actually sell, non-buy, right? But then it could do any of them. But let's just watch out for any of them, guys. So that's pretty much it for today. Thank you very much for watching. If you like what I do, don't forget to like, share, subscribe. Thank you. God bless you. Good luck.